So learning objective 3, prepare adjusting entries for accruals. So what is accrued expenses? What is accrued revenue? Accrued expenses, okay, accrued expenses are those have been incurred, okay, are those have been incurred but have not been recorded during the accounting period, okay? So those expenses have been occurred but was not recorded. So now we need to record it, accrued expenses. So for example, the client haven't considered accounting fee yet, okay? So what happened is they gave me all the information after the fiscal year end, right? It takes them some time to gather all the accounting information. Send to, let's say their fiscal year end is December 31st, right? I probably received the records on February the next year, okay? So during that accounting period ended December 31st, they didn't record the money they are going to pay me for the work of the fiscal year. Because eventually they are going to pay me the money, right? For working on their fiscal year, right? But they haven't recorded yet, okay? So that would be an accrued accounting fee, right? So you debit accounting fee, credit accounts payable on the fiscal year end. Okay, so adjustment made for accrued expenses to record obligations, right? So on the last day of the fiscal year, you have obligations, right, to pay the pay accounting fee, right? Because that's just part of the business. You have to pay the accounting fee, right? If you don't know how to do it yourself, right? And then the adjusting entry result would be, for example, in my case, so I'm going to increase their expenses because they didn't recognize their accounting expenses. Accounting expense for $3,000, right? So this is the fiscal year end, June 30th. But they haven't paid me yet, right? On this date, they haven't paid me yet. So you credit accounts payable for 3,000. So the adjusting entry result an increase, which is debit to an expenses account, and a decrease and an increase or credit to a liability payable account. So in my example, it's debit the accounting expenses and credit the liability, the accounts payable for 3,000. Okay, so does this make sense? 1, 2, 3. Sum up. Okay, does anyone have any question? I received one question. Why not the cash in place accrued expenses? Okay, so I received the record from the client on February, and then I finished work probably in March. I sent the bill to the client, and the client will probably pay me like mid of March of the next year. Okay, so as of the fiscal year end, December 31st, okay, the client didn't pay me. The client paid me in April the following year. So that is why it's accounts payable. Okay, now accrued revenue. Accrued revenue. So revenue have been earned, but was not recorded. So the revenue have been earned, but not recorded at the end of accounting period. Okay. So what should we do? Okay, let's say the superstore sold an item, a furniture to a client, but the superstore forget to record that entry, right? So what are you gonna do? So in your journal entry, you'll be, oh, I made the sales. I credit my sales revenue for 3,000, right? But I didn't receive the cash yet, right? I didn't receive the cash yet. So I debit accounts receivable for 3,000. Okay. So during the year, these sales have been earned, but it was not recorded. Okay. So therefore, you credit sales, you debit accounts receivable. So this adjustment, okay, is required to record receivable and record revenue. So you debit accounts receivable, you credit sales revenue. Adjusting entry result an increase to an asset account. Well, increase to an asset account and the credit to the revenue. Okay. So does this make sense? Okay, 1, 2, 3. 1, 2, 3. Sum up, please. Okay. Good. Very good. Okay. So this table is really nice because it summarized everything. Prepaid expenses, deferred revenue, accrued expenses, and accrued revenue. So I think this is a good summary of what we have done in the last two learning objectives. So it's it's worthy you to look into this, okay? Just to look into this. Note for prepayment, you would have an initial journal entry, and then on the year and the date, you have adjusting entry. But for accruals, there is no initial entry. They have adjustment entry. Okay, so that's the difference between prepayment and accruals.